I'm Viktor Dergunov. Welcome to the Financial Profit. I'm glad to see you here. So, Nvidia posted earnings recently, just yesterday actually. Nvidia just did it again, announcing another excellent quarter and offering better than expected guidance. However, the market seems more challenging to please these days. Despite the top and bottom line beats and the better than anticipated guidance, Nvidia's recent stellar results, they received a mixed reaction on Wall Street. Some market participants are concerned that the AI build-out may be slowing and that Nvidia's profitability could falter down the line, if not sooner. Also, there are macroeconomic and geopolitical concerns weighing on Nvidia's stock price recently and on the overall general market sentiment. In general, there are concerns with the new administration. There's a lot of uncertainty in the air, and as well as there are questions regarding how long this advanced AI build-out process will last, and when, if, in the near future, could we see a substantial slowdown. And since Nvidia is the most instrumental, the leading company in the AI space, we always look to Nvidia's earnings as kind of the bellwether for the whole AI segment, and perhaps maybe even the whole market in general. So despite the market's uncertainty regarding Nvidia, demand for its market-leading Blackwell AI data center GPU and other products is, to use the CEO's words, amazing. Moreover, there doesn't appear to be compelling evidence that suggests that the DeepSeek event or other negative phenomena that we've witnessed recently will imminently hurt sales or enable a downturn for Nvidia in the near future. On the contrary, the insane demand for Blackwell and other Nvidia products and services could continue to expand, leading to substantial sales and profitability increases for Nvidia, as well as other top companies in this highly lucrative AI data center GPU accelerator space. Now, there are a lot of questions about AI in general. How useful is it going to be? How much is it going to increase company efficiency? How much money will companies make off it? Et cetera, et cetera. But I want to share this chart with you that shows the AI market size trajectory moving forward. So the AI market is anticipated to expand substantially in future years. While we've witnessed the initial stages of the AI boom, we could still be in the relatively early innings of this ballgame. And to use a baseball analogy, we may be around the bottom of the third or the top of the fourth inning, somewhere around there. And to all my friends not familiar with baseball, we may only be around halfway through the AI expansion cycle, possibly less even. So the AI market size was around $638 billion in 2024. Now, according to many projections, not just these, but many AI market projections, we could see approximately a 20% increase this year, as well as a CAGR rate of approximately 20% through the next decade, potentially driving the AI market to a staggering 2034, or maybe even sooner. Now, despite the DeepSeek noise and other transitory factors, the world will continue to spend extraordinary sums to increase compute because it remains a race for AI dominance. And every leading company in its segment, in the AI segment, could attempt to leverage AI to gain an edge over its competitor. Now, I want to highlight that this is not a race to cut costs, nor will it become a race to cut AI-related costs anytime soon, in my view. We should also consider that Nvidia is the key player powering AI at the base of the AI revolution. So Nvidia could continue benefiting as more enterprises continue adopting and advancing, their AI programs in future years. Now, let's take a look at the technical setup here. Nvidia has been consolidating for about 8 months now. We've seen some wild swings here, like in June. We saw a blow off top, then an ultra low level buying opportunity in early August. More recently, however, Nvidia has been stuck in a more narrow range of roughly 120 to 150. Now, in a bullish case scenario, Nvidia would break out above the 140, 150 resistance level soon and potentially move towards the 180 resistance level range. However, we should also be mindful, that's the bullish case. We should also be mindful of a possible bearish case. While it's a lower probability, it is possible, so we should discuss it. The crucial support is around $120 to $115. If Nvidia trades down to and below this level, the bull thesis for Nvidia may be in serious trouble, and there would be an increased probability for a more prolonged decline in Nvidia stock. So we really must watch this critical 120, 115 support level. The market must look at Nvidia from a more realistic perspective now, meaning that Nvidia won't blow away earnings and guidance as it did in 2023 and 2024 every single time. Now, despite this dynamic, the stock has consolidated for a prolonged time frame, so it may break out to new highs soon. Well, now that we've talked about the technicals, let's discuss the earnings a little bit. Let's just dive right into them. So, earnings review. What can I say? Basically, Nvidia had another excellent quarter. Nvidia delivered earnings per share of 89 cents, a 4-cent beat. This presented a 71% EPS increase over the same quarter last year. Revenue came in at $39.33 billion, a 78% year-over-year increase, and a $1.17 billion beat over the consensus estimate. In addition, Nvidia also provided a very solid outlook. The company anticipates revenues to be about $43 billion in Q1, better than the consensus estimate for $42.05 billion in sales. Now, another factor to consider is that Nvidia often sandbags its guidance. It actually does this a lot, which means that it will likely beat its guidance for $43 billion, and it could beat it by a healthy margin. So let me just give you an example. For instance, last quarter, Nvidia guided to $37.5 billion. So in Q3, Q4, Nvidia guided for $37.5 billion in sales versus the then consensus estimate for $37.04 billion. However, we just witnessed that Nvidia Nvidia achieved $39.33 billion in sales. So it guided $37.5 billion, but achieved $39.33 billion, which is almost a 5% beat over its initial guide. So if Nvidia beats the $43 billion guide by around 5%, this quarter, it could deliver closer to $45 billion in Q1. So it's guided to 43, but there's a very high probability that it's going to at least achieve $44 billion and probably get into that $44 to the $45 billion range in Q1, which is pretty bullish. This dynamic illustrates just how rapidly Nvidia continues to expand sales, and personally, I see nothing wrong with the company's guidance here. I also want to highlight Nvidia's massive data center growth and how it continues and how it's likely to continue moving forward. So data center sales increased by 94% year over year to $35.58 billion last quarter. Quarter over quarter, we saw a sequential increase of about 16%. Nvidia's growth remains stellar, and while there will be a substantial slowdown at some point, we may not witness it in the near term. So again, there's going to be a slowdown. We all know it's coming. The build-out process will slow down, and it will slow down substantially, but, we don't know exactly when that's going to happen. All enterprises are different, and while some may be ahead of the game in AI infrastructure, like Microsoft and Meta and other giants like Google, many may still be behind. Meanwhile, Nvidia has become relatively inexpensive. So first, I want to draw your attention to Nvidia's consistency and how Nvidia consistently beats its earnings per share estimates. In fact, Nvidia has missed EPS only once, and by only 1 penny in the last 5 years of reporting. Other than that, it's been either meet or beat for Nvidia. Now, while it's not a staggering amount, Nvidia has beat its TTM consensus estimates, EPS estimates, by about 7%. We are in Nvidia's fiscal 2026 year now, so we should be looking forward to fiscal 2027 to derive our forward PE ratio for Nvidia. Also, based on prior outperformances, we can assign a modest 5% beat rate to Nvidia's projected fiscal 2027 consensus EPS, which is $5.57 right now. So this implies that Nvidia could deliver about $5.85 or maybe even $6 in fiscal 2027. So my estimate is actually for $6 for Nvidia to beat by around the same rate that it has beat in recent quarters, and for Nvidia to achieve roughly $6 in EPS next year in fiscal 2027. Now, I also want to emphasize that higher end estimates range up to about $8, implying there is a solid possibility Nvidia's profitability could rise more than anticipated in a more bullish case outcome. Still, even if we implement a relatively modest 5% earnings EPS beat rate, and we implement my $6 earnings per share figure for fiscal 2027, Nvidia is currently trading at only about a 20 to 22 forward PE ratio. Now, this is very cheap. This valuation is extremely cheap for a dominant market-leading company with substantial growth prospects and significant profitability potential like Nvidia. Also, from a forward PEG ratio perspective, Nvidia trades well below a 1 for fiscal 2026 and also below 1 for fiscal 2027, which is remarkably cheap for for Nvidia here. Now, let's look at my price target tables. Revenues, 2026 revenues this year, fiscal 2026. So this year's revenues, I expect can come in at around 200 billion. We should continue seeing robust demand. So next year we could see revenues, moving up by about 23% to 245 billion and roughly 282 billion in 2028. Now, these are my estimates. They may seem high, but they're really not that high because they are around, the midpoint of the consensus and some higher end estimates. So around in the middle of the consensus and higher end estimates, but they're not at the highest end because some estimates are considerably higher than these here. And some of these estimates, they come from, from analysts on Wall Street that spend countless of hours probably analyzing Nvidia. Now, revenue growth I expect can be very solid, but I have it moving, down into the lower double digits in 2020, in 2028, 2029, 2030. And these are also relatively modest estimates compared to many other estimates that I've seen. Now, earnings per share could be around, as we discussed, could be around $6 in fiscal 2026. I have them roughly at about $7.20 in fiscal 2027 and moving to around $8.60 in fiscal 2028. So, we're seeing some healthy EPS growth, but again, in a more bullish case scenario, we could see EPS growth more significant. Now, I'm also implementing a relatively modest forward P ratio of just, around 20 to 29 here. I'm not doing like a 30 or a 40 P ratio or anything like that. And we still have the stock price, appreciating considerably to about 180 this year, to maybe around 230 to 250 next year, roughly 300 to maybe 350 by 2028 or 2029. And we can probably see the stock price moving to 350, 400 or higher by 2030. Now, again, I just want to mention that I utilize relatively modest sales and EPS projections, incorporating a relatively low P multiple. So in a more bullish case scenario, we could see more rapid sales and more rapid EPS growth leading to even more significant multiple expansion. And we could, see the stock price move higher quicker than my projections anticipate. Nonetheless, for the sake of being on the more modest side of estimates, I'm just going to keep my growth and my profitability estimates relatively modest, but it still brings us to, to a 1-year price target of $180 for Nvidia, which is substantially higher than where the stock is today. So that's my profit report on Nvidia. Thank you for watching. And please comment if you agree with me or if you disagree with me. All comments are welcome here. I'm a proponent of free speech. If you enjoyed my video, please click like, share, and subscribe. You can also follow me, Viktor Dergunov, at seekingalpha.com. And please feel free to join our highly successful investing group, The Financial Profit, also at seekingalpha.com. Thank you very much for watching, and have an amazing day.